Good day, YouTube. This is Jay Money with Falling Forward Financial. Just a article here on some recession stocks. 3 stocks to buy during a recession. Here's some of the key points. The 3 are Altria, Verizon, and J&J. Altria's core business might be gradually shrinking, but it still rewards patient investors with generous buybacks and dividends. Verizon's slow and steady growth makes it a great defensive stock during an economic downturn. J&J's 3 core business give it plenty of options to grow throughout both economic expansions and recessions. So 3 pretty good stocks, I feel, in my opinion. So I agree with all 3 of these. Not that I give tax, legal, or trading advice, just state my opinion, but the U.S. hasn't yet entered a recession, which is officially defined as 2 consecutive quarters of negative GDP growth. But runaway inflation, stagnant wages, food shortages, rising interest rates, and geopolitical turmoil could break the fragile economies back in the near future. GDP already fell 1.5% in the first quarter of 2022, so another drop in the second quarter would kick off a fresh recession. So we'll review 3 resilient blue stocks in the portfolio if dreaded recession finally starts. First is Altria, Verizon, and J&J. So Altria is a top tobacco company. Some people call these sin stocks. They pay great dividends, so people are going to smoke whether you invest in these or not, so why not make some money off of it? That's how I look at it. So if you smoke, it's fine. I don't care, so I just looking at the dividends. So but Altria is a top tobacco company. Its flagship Marlboro brand controlled 42.6% of the domestic cigarette market in the first quarter of 2022. It also sells cigars, oral tobacco products, heated tobacco products, which heat up sticks of tobacco instead of burning them through a partnership with Philip Morris PM. So that's kind of interesting. Maybe they'll merge and be one great big giant company someday. It's hard to say. Altria might initially seem like a weak long-term investment since U.S. Smoking rates have steadily declined over the past 6 decades. However, Altria has also consistently raised its prices, reduced its expenses, and repurchased its shares to boost its earnings per share, and revenue growth stalled out. Between 2011 and 2021, the annual revenue grew from 23.8 to 26 billion, representing an anemic compound annual growth CAGR of 0.9%. However, its adjusted EPS rose at a CAGR of 8.4%. On its own, Altria's stock rose nearly 50% over the past 10 years, but after the factoring in reinvested dividends, it generated a total return of 150%. So can't go wrong with this one, it looks like. So next is Verizon. Verizon is the largest wireless network in the United States. Is another slow growth stock, consistently generates stable returns throughout economic downturns. Between 2011 and 21, consolidated revenue grew from 110.9 billion to 133.6, representing a CAGR of 1.9%. However, its adjusted EPS increased at a CAGR of 9.6% as it raised its prices and cut its costs. And here you can kind of see a chart, currently at $50.82, $213 billion market cap. And looks like it was actually down a little bit on Friday, so Verizon's debt ballooned after it bought out Vodafone. I used to have a Vodafone. I'd have to double check and see if I sold it all or not. 45% stake in Verizon Wireless for $130 billion in 2014. However, it didn't try to become a pay TV and media giant like AT&T, which is also buying there for a while, which clearly bit off more than it can chew in its acquisitions of DirecTV and Time Warner. As a result, Verizon has remained a safer and more predictable telecom play than AT&T. It's raised its dividend annually for 15 consecutive years and currently pays a forward yield of nearly 5%. Stock prices only rose 20% over the past 10 years, but it delivered a total return of 90%. Verizon won't generate any massive near-term gains this year, but its stable business model and low forward P/E ratio of 9 makes it a great defensive stock to own during the market downturn. Next is Johnson & Johnson. Their portfolio of pharmaceutical, consumer healthcare, and medical device products makes it an ideal evergreen investment for long-term investors. Currently at $172.55 with a $454 billion market cap, so they're just a huge company. Here you can kind of see the day's range, so you could almost trade it and get a $3 play in there. And there's the 52-week range, so appreciated about $31 a share. So the three core businesses often grow in tandem, but it can also easily offset a cyclical slowdown at one of its segments with the growth of the other two divisions. Between 2011 and 2021, the revenue rose from $65 billion to $93.8 billion, representing a CAGR of 3.7%, even as its pharmaceutical division struggled with the patent expirations of several blockbuster drugs, and its consumer business was hit by several safety-related lawsuits. Its adjusted earnings per share also increased at a CAGR of 7%. J&J growth rates are exciting, but it consistently plows its excess cash into buybacks and dividends. It reduced an outstanding shares of about 4% over the past decade, and top dividend king that has raised its dividend for nearly 60 straight years. Its stock has risen nearly 180% over the past 10 years, which translated to a total return of more than 260%. So, even though some of these three are slow growing, you can see the returns on them, so can't complain about the returns on any of those. But again, those three were Altria, Verizon, Johnson & Johnson, and might help you sleep a little bit better at night, and maybe they won't with everything being in the red, but I always say that's a good buying opportunity. Not that I give tax, legal, or trading advice, just stating my opinion. But these are three solid dividend-paying stocks, and they, as you can see, don't appreciate a whole lot, but they hold their ground. You're not going to, well, you could lose money on them, but you're not going to lose as much money on these as you would some other stocks. But just, again, in my opinion, but that is the three. You can list which one is your favorite in the comments. I have all three. Probably the biggest holding in Verizon, and then probably next is AT&T for telecom play. But out of the three, I have Verizon. That's my biggest holding. So, but that's it for this one. If you haven't smashed that like button yet, go ahead and hit that for me, as well as subscribing and hit the bell so you're notified of when the next videos drop. Again, this is J Money Falling Forward Financial. Happy trading, happy investing, stay green. Cheers.